So the biggest news over the weekend, not the weekend, over the week, is the Iran-Israel war, right? There seems to be a tit for tat. Now, we're not here to talk about the geopolitics and who's right, who's wrong, but we are here to share our views on how this can impact the stock market, how it has already impacted the stock market, and how you can potentially take advantage of this. So yeah, there's the attack. Big country attack small country, but the small country is very powerful, so looks can be deceiving. So Israel carried out a strike inside Iran, and the US is now telling the world and everybody that, hey, there might be escalation. Now, I could be totally wrong, but if I were Iranian, I would be thinking, hey, if we really go to war, it's going to be really challenging because so much oil goes through the Strait of Hormuz. Iran is a producer of oil as well. A big chunk of the economy comes from that. And so that might be challenging. And so my theory is that not necessarily there will be no escalation, but maybe not to the point where it's an all-out war.
Yeah, I believe it's like 20%, right, of the oil production comes from
the Strait of Hormuz. And it's a very thin strait, right? It's very similar to the Strait of Malacca. So there you go.
Yeah, but thank God Iran actually... well, they did say that they are going to the maximum level if, let's say, things escalate, but then they got kind of like toned down a little bit.
There you go.
Yeah.
Yeah.
So, yeah, that is something that I believe that they did a good job.
Yeah. So, of course, the biggest change is the fact that oil is now above 80 and it almost reached 90, right? I was seeing some days, right, it was trading around that. So, this is, when you look from a 20, 30-year average, right, it is on the higher side of things. The only times where oil prices are at the current level would be 2014 and then early 2021, 2022. And of course, you go all the way back to 2007, 2008 for the oil prices to be like that. So my view on oil has always been that it's going to go up whether or not the people, or rather whether or not there's a war. A war can accelerate it, but as a trend, right, it's going up. Now, why? Is because, it's not popular to create more oil fields or to create more oil rigs or platforms. As such, people underinvest. But guess what? The demand for oil is not dropping, right? There's always be some new gadget or some new thing that requires oil, even though there are electrical replacements. So that's my theory. It could be wrong. Let me know in the comments. And so that's why I think oil will be going up. So the next thing, which is a bit of a surprise, well, actually, in hindsight, it's not. But, it's a good surprise for precious metal holders, especially gold. I believe silver is up as well. The story I always share with our FIRL Pro members, our Telegram group, is that I got an ang pao for about 100 ringgit, which is a silver gold coin. It was at like 20, 21 per ounce. And then today, last I checked, was 28 or 29. So best ang pao ever. So this is gold. Gold break past, it's already all-time high a few years back. But then it broke past the 2000 or 2001 level to where it is today. This is, gold is a 5,000-year asset or more. This is literally, it's a multi-millennium high.
Yeah, I think because big investors also don't know where to put their money because of like inflation and interest rate, and then there's war. So the safest asset, that might not go.
Yeah, so one thing very interesting is this, right? So the theory is that gold kind of fights with the US dollar. It's a rival to the US dollar, similar like how Bitcoin is a rival to the US dollar. So if you look at 2020, gold had a big spike up, right? Why? Pandemic. But then the interest rates level didn't really change. And so that made the US dollar, in theory, unattractive. But gold went down as well. So you can see like from here, right? This is the start of 2020. You would think that, hey, now the government has to give more stimulus. The government has to print more money. The government have to lower interest rates. And yet gold went down, right? Generally a downtrend, right? It didn't go up, the point. But then as the government started to raise interest rate in 2022, which is probably somewhere here, that's when you see a bounce back up.
Yeah.
Which is very interesting, right? Because now the US dollar has become more attractive. So you would think people would dump other things for the US dollar, but gold also went up. So that's very interesting. But then now, we know that thanks to inflation, thanks to multitude of reasons, that the Federal Reserve is signaling that, hey, we're not going to lower interest rates, right? Because inflation, we need to fight inflation.
Yeah, exactly. Yeah.
And then it goes up some more. So there you go.
People are scared about interest rates.
Exactly.
Yeah. Okay, so this one is based on Rakuten Trade's equity research. Basically, they say that because of what's happening in the Middle East, geopolitical tension, and also because of inflation and commodity prices, they think that now it's time to focus on commodities sectors. So your commodity sectors are your palm oil, crude oil, and metals, and which is why these three sectors have actually risen quite a bit. And they also mentioned that cash and commodities are currently considered safe haven. So most likely these institutions are maybe they don't find property and construction that attractive already. Maybe there will be a shift coming soon, but who knows? Okay, so but if you look at share price, right, the oil actually went up, and this caused Carimine, Petroleum, Dilium, Dayang, and even Hibiscus to actually rally quite a fair bit, while Dayang actually went up like 59%, which is very impressive.
Yeah, so maybe some spoiler for them, right? We have a couple of these companies in our portfolio. One of them start with D. You can figure out which one.
One of the Ds.
Yeah, one of these. So the way we approach the oil play is that because we took positions way before, right? But it depends on what kind of oil investor you are. I think if you want to be a lot more conservative, then you can go for the support services. So I believe Dilium is one. I think Dayang is one as well. Charimin definitely. These are not people that actually dig the oil, but they support the people who dig the oil, right? So it's a lot safer because they don't have to spend that much money, take so much risk to explore for oil or buy an oil field, whatever. So if you want a company that is probably less volatile on average, then these are some of your companies. Some other catalysts you can look forward to will be Petronas, Capex, and things like that. Then the flip side, if you're a bit more aggressive, then you can opt to get more of the upstream players. These are the guys digging oil, so that would be Hibiscus. So really, you need to ask yourself, how do you want to invest in oil and gas? If you don't mind the volatility, if you're very aggressive, then go for EPCCs. Hello investors, are you tired of going through endless complex financial reports? Maybe you're sick of all the information overload? Want a faster, easier way to research stock investments? Well, we've got the solution for you. Introducing FIRL Pro. FIRL Pro is your go-to source for concise, easy to understand stock reports. We shortcut your research journey by 90%. Each report is crafted to be straightforward yet informative, taking no more than 15 minutes to read. That's right, just 15 minutes to unlock key insights about stock investments. The program works especially well if you are busy with work, family, and activities. The best part, it's totally risk-free because we offer a hassle-free money-back guarantee. If you're not satisfied after purchasing it, just email us here within 10 days of purchase for a full refund. No questions asked. Not sure about the program yet? No problem. You can check out our free sample reports available in the video description or comments below. It's a great way to experience the FIRL Pro advantage firsthand. Get informed with FIRL Pro.
Okay, the second one is
palm oil. Yes.
Yeah, so right now I think if you look at CPO prices, it's going up the roof, but recently they kind of eased a little bit already, which is expected. But so far there are a few companies that actually went up year to date. So the one that got the most attraction is United Plantation, is up 42%. I think that's the only company that most of the institutions are actually coming into it because of their juicy dividends. So yeah, that's about it. But the future outlook for it, it's probably going to be quite interesting.
It's a net positive, right?
Yeah, it's a net positive. And some companies who has, like majority of their palm trees are at the maturity stage, or they are at the prime age where they can actually deliver the most yield. So those are the companies that we also talk about in FIRL Pro. And some of the companies are even inside FIRL Pro portfolio. So if you want to find out, make sure to go inside.
Yeah, I think
FIRL
one
Pro.
thing interesting here is that United Plantation, which has been sleeping for years, suddenly decided to wake up, and the yield is still like 6-7%, right? Which is kind of crazy. But why is palm oil going up actually? Is it to do with the war or something else?
So it has to do with, one is the weather, the El Nino, and also have to do with the supply that we have. Actually, eventually the demand, the consumption will outpace the supply because of also have to do with EUs because EU also they say they cannot deforest.
They don't like Malaysia, Indonesia deforesting.
Correct. And also because Indonesia, they have these biodiesels, the plant that they have to do, so they have to consume more, and probably in the future they're going to be exporting less. So the only main exporter will be coming from Malaysia, and which is why maybe CPO price will like stay elevated for the time being. But yeah, so that is the catalyst that we see for palm oil. Now the last one is metal. So this one is very interesting because precious metal has not been actually moving for quite some time, but suddenly it rallied. Something to do with aluminium also and the tin price. So for aluminium, I'm not too sure why. Probably it's because of solar also. Probably it's because of data center. But for tin, this one I can know because there is certain countries that they have not really get fully operation. So like for example, the Myanmar, which is one of the largest tin mining producers, tin mining country, they actually halted their operations.
Wow.
So, and they are the largest. So you assume, if you think about it, right, the supply is getting cut at the moment, which would increase the tin price because right now semiconductors also need to use a lot of solders. Solder, SOLDER.
Yeah.
So
I think we use in Kemahiran Hidup class.
Correct. So yeah, as a result, less tin supply, more tin demand, tin price go up. And funny thing is that this Malaysia Smelting Corporation follows tin prices movement. So if tin prices go up, they also go up, which is why their share price also is moving. So yeah, this is also inside the FIRL program that we talked about much earlier. But yeah, that's about it.
So yeah, what is the takeaway? I think that cause for war is always going to be there, right? Guys, don't forget, just a couple of years ago, Russia invaded Ukraine, and that was like an actual war, right? And then you might say, well, it's a bit different because it's Iran, there's oil. Well, I mean, Russia had oil as well. So it's always going to be there, right? Conflicts. If you drag back 50, 60 years, every decade there's always 2 to 3 wars, right? In the 90s there was the Kosovo War, the Yugoslavian wars, Balkan wars. In the 2000s, you had the Iraq War. 2010s, do you have any big ones? We had the Arab Spring. We had wars in Syria. We had so many wars. Then now we have Russia and
Ukraine,
Israel again. So my view has always been, you can go 100% cash. It's actually not wrong. It's just at the end of the day, investing is about it's about having your wealth in assets that can grow and last over time and withstand shocks, right? I always liken this example because, I interact with old people every now and then, and a lot of them have the mindset, right? When they grow older, they actually want to do less physical activity. And the reason they say that is because they scared they fall down and it's fatal and all that, which is a legit concern. But if you think about that, right, the less you exercise, the less you put some strain on your body, the bigger the impact is going to be when you do eventually fall, right? Because most old people will eventually fall somewhere, 70, 80, 90 years old. So I think the mindset should be more akin to, what can I do that when I fall, I'm protected. And so the thing is similar here. I think if you're going 100% cash, you are like that old person who just don't want any chance that you will fall down at all. But my approach is, no, I think I want to build a portfolio that's resilient, that can last throughout whatever volatility that comes.
So exactly. Basically, MJ just explained every single thing.
So,
but if you are like us who can manage risks, you can actually check out FIRL Pro. So far our performance has been pretty well. I mean, it's like up 9%.
It will be a bit lower because the
market's generally down a little bit. So if you want to know more about FIRL Pro, is basically where we share our best ideas inside this website. And every single month we'll publish at least minimum 2 reports. Some months we even publish 3, and all these reports only take less than 15 minutes to read it and to understand about the company's catalysts and valuations. Yeah, and all these interesting stuff is you can find it inside FIRL Pro, and these are the companies that we have for FIRL Pro and Catalyst. But if you want to know more information on how we write our report, you can check out our free sample. So we wrote about SMRT and also Delium. So if you want to find out how we actually analyze companies, feel free to check out the free sample. The links will be in the description and comments below.
I want to, some of you ask like, why is there like 2 portfolios, right? So the first portfolio, on the one you see on top, this is where our best ideas get into. This is the main FIRL Pro portfolio. Then for the Catalyst portfolio, that's more short-term. So our best short-term ideas. Now, breaking news, just in, right? We launched over the weekend for our paying members a dividend portfolio, right? It's called the Boring Portfolio. It's what we think are the top 8 to 10 companies in Malaysia that has the best dividend yield and that can grow and is sustainable, right? So it's not like a once-off, 15% dividend yield. Right now, I think the average dividend yield is about 8 to 9%. So solid stuff, outpacing EPF. And if you are interested in checking out what these names are, do hop onto the FIRL Pro. And there's a 10% discount code. So make sure you read in the comment section or the description what that code is, apply it so that you can get that sweet discount. And with that, guys, thank you so much for watching the video until the end. Whether or not you hop onto our programs, always thankful for the support. See you in the next one.